What's going on, guys? Mike here. Today we're going to see about how to plot Fibonacci instrument in your trading, how to use Fibonacci, how to plot it, entry and exit strategies. My name is Mike Fibonacci. I've been trading for the last 3 years, and without further ado, let's dive in. Before that, make sure to subscribe and hit the like button so you don't miss any videos. So first of all, what is Fibonacci? Fibonacci instrument is a trading instrument, as you can see here on my screen. It is a phenomenon that occurs in nature and in finances as well. So anything that in trading, anything that extend will have to retracement and eventually has its Fibonacci extension. So these are my settings. So as you can see here, this one is level 100. This one is the 100. The 01 is the swing high point or swing low. You can use it whenever we like. So how do we plot Fibonacci? So the way we plot Fibonacci is from the swing high to the swing low, or from the swing low to the swing high, whichever one we prefer. So in a downtrend market, we plot Fibonacci from the swing high to the swing low. So for example, on Nasdaq, let's plot Fibonacci. So first, before plotting the Fibonacci, we have to mark out the swing high and the swing low points. So from this, the 4-hour time frame of Nasdaq, for example, these are the swing high points. These are the swing high points. This is the swing high point, and this is the swing low point. This is the swing low point. So another plot, this is the swing low point, this is the swing high point. One other example, in a downtrend market, for example, this is the swing high, and this will be the swing low. Another example, once price breaks this swing low point, another swing point has been created. So this is the swing low, and eventually this becomes the swing high. This one here becomes the swing high. So this is essentially how to plot Fibonacci. So whenever we want to draw Fibonacci, we will plot it from the swing high to the swing low, or from the swing low to the swing high. So first of all, so once we have identified the swing low and the swing high points, so we will wait for a break of structure. So what I consider for a break of structure, for example, in this Nasdaq time frame, so this, I consider this one as a major level of support. So once price breaks this point, so is a new swing low has been formed right here. A new swing low has been formed. So for this market structure, so this becomes the swing high point. This becomes the swing high point. So now let's plot our Fibonacci. So whenever in a downtrend, we plot it from the swing high to the swing low point. So from the swing high to the swing low point. So as we can see here, once we have plotted the swing from the swing high to the swing low, we will wait for the price to retrace. So in a financial market, price has to retrace. There is no single market that goes from point A to point B without any retracement. So it's a natural phenomenon in the world as well as in financial markets. So that's why we use Fibonacci. So it's very essential instrument, and once you have learned how to plot it and how to use it, it becomes a powerful instrument in your trading journey. So once we have plotted our Fibonacci, now this is the swing high point, this is the swing high point, and this becomes our swing low point. So as we can see here, once we have plotted, price essentially came from the swing high point to the swing low point, and then it has retraced to the 50% level of the Fibonacci, our Fibonacci level. So it has retraced to the 50% of our Fibonacci. So what did it do after that, after the retracement? So it tested the 50% of our Fibonacci, then the price again pushed downwards. The price pushed downwards to our Fibonacci extension. So 38.2% of Fibonacci extension. So for example, so once we essentially plot our Fibonacci, we wait for the retracement to any level of our Fibonacci, be it 23.6, 38.2, or 50%, or 61.8. 61.8% is commonly known as the golden ratio, or 78.6. So once we wait for the price to retrace from that level, and then our essentially our first TP will be from that point to essentially from the 0%. This will be our first TP. So essentially what we will do is, in a higher time frame, so this above this level is a liquidity point, so we will give it a little bit breathing room. So once price starts to push back again, we will enter, and our first TP target will be the 0 point or 0%, and then our second profit level will be the 38.2. So as we clearly can see here, price has moved from the 50% extension to the 50% retracement zone to the 38.2 extension. So this becomes our TP level. So another example we can see here. First, let's clear out these marks. Easy way to plot, for example, in our recent markets, you can see here that NAS, once it broke this structure and pushed back upwards, so price market structure has shifted from a downtrend to the uptrend. So we will wait for the break of structure. For example, I will consider this. Once a big candlestick breaks this level with a body, I will consider it a break of structure, and then there is a clear market structure shift. So once this happens, as we all know, we will plot our Fibonacci from the swing low point to the swing high point. So let's assume that this area has not formed yet. So this area has not formed yet. So as we clearly can see here, so we have plotted from the swing low point to the swing high. To the swing high point. So we have plotted from the swing low point to the swing high point. This is the swing high point. So once we have done that, we wait for the retracement of the price. So price went to test the 23.6 level of the Fibonacci, and then once it tested that Fibonacci level, and it came back to the 0 point. So what we can do is we will go to the lower time frame. I use the 1 hour. Commonly most of the traders use 1 hour, so we will let's check the 1 hour. So this is the price. Yes, we plotted from the swing low point to the swing high, from the swing low to the swing high, and then what price did is it came back to retest the 23% of Fibonacci. It came back to retest the 23% of Fibonacci. Then on the 1 hour time frame, price started to have market structure shift. So from having higher highs to lower lows, higher lows to lower lows, market started to have higher highs, higher lows, higher highs, higher lows, and then higher highs, higher lows. So we will enter by confirming the 15 minutes. Let's went to further to the 15-minute structure. So this is it. Yes, so once price has started the downward trend and tested the 23% of the Fibonacci, and once we have a clear market structure shift, then we will enter. So here is, so from having higher lows to higher, from lower highs to lower lows, lower highs to lower lows, price started to have higher highs and higher lows. So that's when we know the market structure has shifted. So from this point on, we will target first the 0 point. From the 0 point, and then further our second TP will be this area. Yes, this is the 38, the first extension. But as we can see here, price immediately went to reach for the 0%. Eventually we did have some drawdowns, but price eventually hit our TP, our first TP. So from this on, once price hits the 0%, we can set break even and hold our rest of the trades. So this is how we plot. So for the stop loss points, we can use immediate next level of the Fibonacci. So for example, once we enter, let's say we entered here, so we can use this level, right? We can use this level. So this is a 1-to-1 risk ratio trade. So if price eventually moved to our 38 point extension, it would have been a 1 to 3 risk reward trade. It would have been a 1 to 3 risk reward trade. So but eventually price went on to test another Fibonacci level, so it was just a 1 to 1 risk reward to ratio trade. So this is roughly how we plot Fibonacci. So for example, on recent Nasdaq markets, let's see from the higher time frames. So essentially what Nas did is, yesterday it broke these levels. Yes, it broke these levels, so it made a new high on a recent 4-hour structure. So price clearly is having higher highs and higher lows. So what we are thinking here is opportunity for buys. Yes, we will look for opportunities for buys. So once price made a swing high point, we will plot our Fibonacci from the swing low to swing high, because this is an uptrending market. This is an uptrending market. So, and then we will wait for the retracement. Yes, so once we plotted, we can clearly see here price has tested the 61.8% of our Fibonacci, which is known as our golden ratio, from here to 61.8%, and then slowly it is rising. Yes, slowly it is pushing back up, so it is well aligned with our plan. So we will go to our lower time frames. We can clearly see here price, once it tested the 61.8%, it started to push back up by making higher highs and higher lows. Yes, higher highs and higher lows. So once it did this, we will wait for price to get volatile, especially in New York session. That's when NAS and 30 and all other pairs move very good. So once we go on to the New York session, we will look for entries on the 15-minute chart, and then we will possibly, once it breaks this minor level of resistance, we will enter here and then possibly target this 0% of our Fibonacci level or our first extension. So we can use our TPs for deeper extensions, for example our minus 2.72%, or deeper extensions, for example minus 1.618%, but this is for a swing trades. Usually we will not use this for day trading. So this is roughly how we plot Fibonacci. For example, let's see another example. This is very easy, guys, very easy to master once you understand how to plot Fibonacci. For example, here is a swing high point, and then once price breaks below this level, it made a new swing low points. So we will plot our Fibonacci from the swing high to the swing low, and we can clearly see here price, once it breaks and then come back to retest the 61.8% of the price, and then started to push back down. Yes, started to push back down. So in this area, it has clearly, notice how it reacts to our extension levels. Once it hits this level, TP set, and then immediately started to push back up. So this is how you know you plotted your Fibonacci well, because you can clearly see here price clearly, hold on, from the swing high to the swing low. Yes, this is our swing low, this is our swing high. So price clearly hits our second TP and then started to push back up. So this is how we plot Fibonacci, guys. Make sure to subscribe and hit the like button and go watch another of my videos.